Welcome everyone to another stock investment pitch on Snapchat. Here today we have Bryce, who is a student analyst in our program and recently completed our internship. And what this is meant to do is give you more understanding of the level of analysis applied by Wall Street professionals when it comes to evaluating if a stock is overvalued, undervalued, or fairly priced. And again, it's meant to give you more educational content so that you can learn more about this process. So with that being said, hi Bryce, how are you?
Hey Luis, I'm doing well. Thank you for having me on. For those of you that don't know me, my name is Bryce Lovcik, and I just finished my sophomore year at the University of Minnesota. I'm a double major in accounting and finance, and I just finished the Romero mentoring program along with an internship with Romero Research. So I'm excited to showcase the skills that I've learned and give you some more insight on Snapchat.
Great. Thank you for that introduction. And what we're going to do here is first walk through your situation overview, give us an understanding of what is the market sentiment, especially from sell-side research, then of course your price target, and understand more of the business in general. How have they been performing? And just for me personally, because we do own the stock in our educational portfolio, what's your take on it? So let me go here through some of the slides that you put together. And in terms of the situation overview that you've put together for us, you are indicating obviously the stock is up over 200% year over year and has outperformed most of the stock market. Okay, now is it still a buy? So why don't you just give me a general overview on this slide, and then we can go a little bit deeper into the price target valuation and other questions that I have on the stock.
Yeah, that sounds good. So Snapchat is a relatively young company. They were founded in 2011, IPO'd in 2017. They're a social media application, and what separates them from other social media applications is the integration of their camera to create content, and then it's easily shared through the same app. And so there's more capabilities as far as editing content, and then there's also more avenues to share that content.
Okay.
And so most of their revenue is derived from their advertising. Yeah, they've done well in the past year. The first years, they didn't see much growth, but over the past year, institutional investors have poured a lot of money, especially this past Q3, when they increased DAUs by 11 million, largest growth since 2017. And so, yeah, the stock's been doing well year over year, and there's definitely opportunity for it to continue growing. They're projecting 50% growth over the next 3 years.
Wow.
It's huge.
Now, so when you say 50%, this is on revenue, right?
Yes, revenue, top line growth.
Okay. Now, what is the general sentiment then from sell-side analysts based on your research? Were most sell-side analysts issuing a buy recommendation or a sell recommendation on the stock?
Every research report I looked at was recommending a buy.
Okay, so they were recommending a buy. I think here in the following slide, you are pointing out Wells Fargo price target of $91, Jefferies 81, Coin 86, and I see you put here some of the notes from each one of these reports. What do you think is the main reason, right, that these analysts are issuing a very favorable price target, right? I think this is more than 50% from where the stock is currently trading at. Right. So what is the main catalyst or better yet, their investment thesis surrounding the stock to give them such high price targets?
Yeah, so at their investor day, they announced that they're expecting 50% top line growth. And before this, analysts had been expecting 40, maybe 45. But yeah, Snapchat was able to announce that they would be able to get 50% top line growth. And their plan made sense. They have under-monetized products, and each one of these products offers $1 billion to $2 billion in revenue if utilized properly.
Okay. When you say under monetized products, what products are you referring to?
Yeah, so they just came out with a Spotlight tab, which is supposed to kind of imitate TikTok. So it's just short videos that replay over and over. And so they haven't done any advertising, I don't think, on the Spotlight side. Along with their maps, they're hoping to integrate with business. Okay. So you could possibly buy movie tickets through the map tab. You could buy concert tickets. And so they'll be able to create revenue that way.
Wow. So they are, okay. So now they're integrating commerce into their platform just to increase revenue and also transactions from their user base. Interesting. Now I see here you have your own price target, which is $84 on the stock. How did you come up with this $84 price target?
Yeah, so that was based on DCF analysis. It's hard to compute their price target based off of comparing other companies because they do trade at a premium just because of how much growth they're expected. Okay. Yeah, using DCF, I was able to come up with $84, just the average of my total.
Okay. And in terms of the industry environment and the level of competition that they're experiencing, I see your second bullet point right here. So Facebook holds most of the market share, 78% market share in this space. How do you think Snapchat can compete with Facebook? Is it based on the demographic, right? They probably have a user or a younger user demographic compared to Facebook that is a older demographic. How do you see them competing?
Yeah, just like you said, Snapchat caters specifically to the Gen Z demographic, which is between 13 and 24 is their sweet spot. And yeah, as they continue to grow, they're going to continue to use the application. And then younger people will also start to use this application. So I think that's one way. And then I think they'll also be able to grow their average revenue per user. Right now, it's way below industry standards, but that's just because of the maturity of the company. And I think over the next couple of years, that number will grow exponentially.
Okay. That's a very important point that you mentioned right there. Average revenue per user. I know you have a slide in here. We'll get to that. But before we get to that, I'm going through your earlier slides. So app features, map, chat, camera, story, spotlight. Okay. And here you've displayed some of the user interface on that application. Then advertising channels, traditional ads, story ads, AR lens. Okay. What is this AR lens? I mean, I have the application. Sometimes I go in there just to play with it, see what younger audience is doing these days. I haven't seen AR lens. What is that?
Yeah, so AR stands for augmented reality. And so basically it'll scan your face and it will apply a certain filter that will move as you move. And so different companies have been able to advertise with this. Like for instance, this shows CoverGirl, so you're able to see makeup on her face. And they're thinking about possibly being able to try on clothes. So partnering with clothing brands like Polo or Nike. That's kind of what that is.
I went on their website and I see that they recently introduced, I think this is today breaking news, they are reporting next generation VR glasses, augmented glasses for spectacle. Did you came across this news? This was today.
Yeah, they actually started their manufacturing their spectacles in 2016. That's just a small part of their revenue right now, but they're expecting that to be big in the next 10 to 15 years as augmented reality keeps growing and keeps being improved. Okay. Yeah, they had spectacles for a couple of years now.
Okay. I know there's another company that we covered in our community feed, View6. They actually also create augmented reality glasses. And that is an industry that is expected to grow tremendously over the next 5 years or so. It's going from a couple $100 million in revenue at a global level to billions. You could do a simple Google search and and find out what the number is, but this is an area of growth. And I do know also that Facebook, they have Oculus. So Facebook with Oculus then is competing now with Snapchat, or Snapchat is going to be competing with Facebook Oculus with their own glasses. So this is interesting. Okay. Now, let's continue here in terms of financial performance. So I see revenue grow 45% in 2019, 52% in 2021. So I do like this revenue growth, and this is probably why the analysts that you showcased on the earlier slide have a buy recommendation on the stock, because revenue growth is just picking up. Okay. Annotated stock chart, industry slide, application usage. This is good. Okay. Now this is a slide that that I wanted to touch on, where previously you've mentioned that they are looking for ways to increase their average revenue per user. And in this chart that you've displayed right here, Snapchat, 9 years of operations, whereas Facebook has been in operation for about 17 years. So am I reading this correctly, where Facebook average revenue per user is approximately $213?
Yep.
Okay, and Snapchat right now, it's only generating about $20?
Yes.
So there is a huge distance, right? A wide range between Facebook and Snapchat. So how do they plan to increase their average revenue per user from $20 to let's say $58, right? Because the next one right here that you have is Twitter. What is the actual operations, or what is the new product or features that they're going to be introducing to help them catch up to Twitter and then Facebook?
Yeah, so the way that the pricing works for advertising and social media is that they base it on number of impressions. So usually it's about 1,000 impressions is what they go off of, and there's a certain rate. And so these companies will bid on that certain rate. And for Twitter and Facebook, they value them as a better opportunity and are willing to pay more of a premium to be on their platforms. Whereas Snapchat, being a younger company, they don't have the same advertising platform as the other two. They won't pay as high of a rate. Mm-hmm. So what Snapchat is looking to do is they're trying to develop targeting ads. Right now, their ads are very broad and they don't target specific demographics for certain audiences.
Okay.
So as they continue to develop that, they'll be able to increase their ARPU number. Also, as they monetize their map features, like you said, if they put some e-commerce into that, as well as develop their augmented reality, they'll be able to create more ARPU.
Okay. So the first one, improve their targeting ads application for businesses or any other type of organization that want to promote their own advertisement or product on their platforms, or targeted ad. And then you've mentioned improve their e-commerce space with the wearables, the augmented reality glasses that they're introducing as well. Okay. Mm-hmm. Interesting. So yeah, no, there is a lot of room here for them to definitely grow. If they can go from $20 to $58 and so on. Did you model any of this out in your financial projections, where Snapchat can go from $20 average revenue per user to maybe $30 or $40? Did you run a scenario like that?
Yeah, I did do a sales build up. So if you keep scrolling down, that'll be there.
Okay, so let's take a look here at the rest of your presentation. Okay.
Yeah, right there.
Okay.
So based on the research reports, I was able to compute numbers that should be fairly accurate for.
Okay, so right. So I see it here. Okay.
Yeah.
Okay, so 12, 16, then 28, then 38. Okay, so you are increasing that, and then sales by region, Europe, globally. Okay. And okay, so I guess the reason why I would assume that the reason why output on a global level is less than on the US level is why is this? Is it just because there's just a bigger population when you're looking at the formula for this calculation? Or is it because the targeted ad revenue in the US is more expensive? What's the reason behind those two?
Yeah, targeted ads in the US is more expensive. And like the graph we just looked at, that was based on North America. And so Facebook's charging $213 per user. And so, yeah, it's just a higher premium in the US. I think it's just based on the GDP of the country and the wealth inside the US.
Okay. And I come back here to your income statement, and I see you're running Wall Street case. So you're running with Wall Street consensus. Did you came up also with other cases? Did you run other scenarios?
Yeah, I also ran a bull and a bear case.
Okay. We'll pull up that slide. I want to see what your case was there. So in terms of revenue growth, 45, 46, 52% this year, 45%. I mean, this is, guys, when I see this level of growth, I get excited because there's not that many companies in the market that are growing revenue over 40% for 5 years. I mean, this is, think back for those of you that really want to learn. Look at the best performing companies over the past decade, from 2010 to 2011. Map out their revenue for that entire decade period. Do it for Google, Amazon, Facebook, what else? Melly, and even Tesla, okay? Because these are the high profile stocks. On those 5 companies, plot out on a spreadsheet revenue for each one of those years, and then calculate the revenue growth. And you'll see what I'm referring to, why I get excited. Because this level of revenue growth means that there's high demand for their product. The user demographic, is growing along with the business. And it also means that their bottom line might be expanding. And it also means that shareholders or institutional investors can continue to accumulate share on a company that is just growing. So if you have strong top line growth, if the company gets to a higher level of profitability, which by 2022, I see here on an earnings per share basis, they are going to be profitable, then this will demand or warrant a higher valuation. Therefore, the stock should continue higher. And the scenario that this might be painting is similar to what Facebook did back in 2010, similar to Amazon, maybe Tesla, obviously different industries, but in principle, the growth, if it's there, if it is higher than the industry average, then you can expect a stock price that will continue to increase over the next 6, 12, 18, or 24 months. So this is why I'm getting very excited by this revenue growth. So I'm just giving you a little bit more color and transparency on why I like this. Is there anything else that you may want to add on this slide, Bryce?
Yeah, I just thought it was interesting that the revenue growth is a little bit higher in the first 2 years, and then it decreases for a year, and then it increases. But I think that has to do with the fact that they're expecting revenues from their augmented reality and their Spotlight in the first couple of years, and then they expect to fully implement their MAPS program in 2024. So that's kind of why there's that little gap there.
Okay. So let me review here. So we have your free cash flow. Let's go back here to your comps. Okay. Total debt. I want to see your valuation. I see here you put a little bit, some technical analysis in here. Okay. Big share accumulation. I'll pull up the chart shortly, and then I can give my technical analysis perspective on that. So this is your 3 scenarios. So you have Wall Street case, $82 price target. So case number 1. Case number 2 is your bear case, $48. Okay. And then your upside case number 3, $93. Okay. What needs to happen in order for the stock to reach $93? What scenarios are you projecting for an upside case? What would need to happen for the upside case in order to be in play?
Yeah, so I think that's dealing more with an increase of ARPU. If they're able to increase that number at a higher rate than what's expected, then $93 is definitely achievable. But I think a more conservative approach would say it would be $82 if their expected ARPU they have right now.
Okay. Now let's take a look at the stock. I always like to combine this with technical analysis just to gauge the momentum and see if analysts are in agreement, if there's harmony between both. So let me pull up here, Snapchat ticker symbol. We're in crypto space, Snap. Okay, so we see that the stock is at least up today, approximately 5%. Obviously, the NASDAQ is leading the market higher today. Over the last couple of months, the NASDAQ tech sector has been underperforming in the backs of inflation, maybe the Fed removing some of the support that they've been providing the market and maybe even raising interest rates in the later end of the year. It has been some of the reasons why tech has been underperforming. But when I see here the chart of Snapchat, if we go to a monthly time frame, this is just consolidating. There's nothing wrong with this. Here is the volume accumulation last year in this month, and this was on the back of earnings. And right now, it's basically just consolidating. I mean, this was the high, and here is that range. So we have a major move to the upside, comes down, and I think it's just consolidating. What needs to happen to attract more institutional buyers to this stock? Do you think is another strong quarterly performance in order for new institutional investors to come back into the stock and take it higher? Or do you think they need to see a higher increase in output?
Yeah, so back in October, where all these institutional investors poured in, that was due to 11 million increase in DAUs over the quarter. So I think if we see a similar number to that, we could see another pour in of institutional investors. But yeah, also ARPU is extremely vital because obviously DAUs, there's only so much room for growth. There's only so many people in the world.
Yeah.
But the ARPU is where they can make the real money because there's no top end of that.
Okay. And now I'm displaying a daily time frame, and I feel I'm highlighting here. I'm annotating it actually on October when they reported better than expected earnings and then obviously better than expected average revenue per user number. But the momentum really began in April. You could see the volume accumulation when they reported earnings. Then again, it followed it up in October, and now it's just consolidating. And again, there's nothing wrong with this. Here's support. For those of you that like chart and are technicians, is respecting the $48 price mark, and it's finding more support over here. So full disclaimer, we took a position today on Snapchat for our educational portfolio for students in our community. And a lot of this is based on the revenue growth that you forecasted and display in your financial model slide. Also the output number, there's a lot more potential to the upside. And the other things that you mentioned, targeted ads, they're developing that side of the business and also integrating more e-commerce components to their application. So as those things begin to materialize and the operations of the business improve, I think in the upcoming quarters, when we begin to see more validation, right, that these things are actually working, I wouldn't be surprised if maybe in the third or fourth quarter of this year, we get an earnings surprise and then the stock just gaps up and blows past $72 in the next 6 to 12 months. Is that what you're anticipating as well, Bryce?
Yeah, for sure. If we get another good report of 10 plus million DAUs, I definitely think that's possible.
Okay. And of course, we have a stop on this position that we took on today of around 40. I think it's the low here. We'll have to double check that. But in terms of having stops in places to minimize any downside risk to the stock, so I believe we have it between $48 or $50 a share. That will be our stop. If it comes back here, we'll be stopped out. We can reevaluate the position. We could probably re-enter it as it moves higher. But longer term, I like the story. I like the growth. I like how the charts it's setting up, and it's just consolidating. I mean, if we look at other examples, right? Let me plot this on a weekly time frame, okay? If we go back and compare this to, let's say, Facebook, okay? Let's go back to on a monthly. I don't think this thing goes back that far out. This is only giving us 2013. Okay, but I think this is fair enough. If you go back, you had a nice move to the upside on Facebook, then consolidated for quite some time, breaks out, and now it's following another leg to the upside, okay? If we plot this with Tesla, right? Let's look at Tesla. I know it's a different company, different industry, but look for how long of a period Tesla consolidated, right? When you see this range, and let's see if we could put it here. Yep, look at this whole range on Tesla, okay? Just consolidating. Once it broke the $76 price mark on a split adjusted basis, you know, before this was, before their stock split, this was, I think this was around $300 or so. And if we look at what has happened since, it's just a stock that just went straight up in a parabolic move. Look at it on a monthly time frame, okay? And now it's pulling back. So when I look at Zoom and Swell, same scenario that is happening with a lot of these tech companies that led the market higher last year, okay? You can see the major leg to the upside obviously is coming down for the reasons that I've mentioned in an environment where we might have inflation, we potentially have also higher interest rates. It's not favorable for tech stocks. But once we get through this period and tech stocks become more attractive, where the growth is reasonable or high enough that it just doesn't justify the current valuation. When the valuation is low and the growth is high, it becomes more attractive for investors, institutional investors, to come back and start accumulating shares and then ride the next wave to the upside. So this is kind of the playbook that I'm looking at when you look at the last decade of the best performing stocks. And it's the same thing that I'm taking into account for Snapchat. Does it work 100% of the time? Of course not. Nothing works 100% of the time. We are in the probability business. But when you understand the variables, when you understand data, when you understand what drives stock prices, and you combine it with the macro, the economic environment, and that there's cycles and waves, when you recognize and you go through several of these cycles, now you have a playbook. And the playbook that I'm using is the same playbook for the last 10 to 15 years. And again, I'm bullish this stock. We own it. I mean, look at it on a weekly basis. Guys, you can see the accumulation. Look here, going back to 2019. Look at this right here. Look at that accumulation of shares. Look at it here. Again, what do you think? You think that's your friend, your Aunt Betty, as William O'Neill used to say from Investors Business Daily? No, this is hundreds of millions of shares. This is billions of dollars being poured into this name by institutional investors. And we're giving you more insight and transparency into the level of analysis and research applied by the big institutional investors that have an army of analysts, have a lot of resources, and have access to more information than myself and the home gamers out there, retail investors. So this is the analysis and this is the game that they're playing. So for you that wants to participate in the market and you know, increase your performance, you need to pay attention and understand not just the technical, but price action, the fundamentals of the business, and also understand the terminologies, the methodologies of valuing a stock. So in terms of scenarios, we already know that you have a $84 price target, Bryce. Your bull case, what was it? Was it $92? Your best case?
Yeah, 93.
Okay. So yeah, I think once we get through this rough period with tech, and later when tech becomes in favor again and capital is starting to pour into technology stock and we go into that rotation, I expect this thing to move higher. Hit your $84 price target and maybe even surpass your 92. And I think the stock can double from here and hit the century mark for them, which would be $100 price target. I think this might unfold over the next 6 to 12 months. So that's one scenario to pay attention to. We are long the stock. We have the fundamentals. We understand the story. And again, I like the growth in this name. And of course, nothing works 100% of the time. Make sure you have your stops in play. But I'm very confident in this name. So any final thoughts or comments coming from you to wrap this up, Bryce?
Yeah, I just want to echo, it's a great company. There's so many opportunities for them to grow revenue. So even if one way doesn't work out, there's multiple ways that they're going to be able to grow their revenue. So I think it's a safe bet to say that they will reach that $84 price target. Yeah. And I think for their audience, you know, Gen Z, first-time investors, if you like the application and if you love it, then we've just done the homework for you, right? We did most of the legwork. We've gave you our perspective, our insight. And if you are a user and you love the application, remember, you're actually the product. So how do you participate on any upside? Buy the stock and be responsible. Apply proper portfolio management and risk management principle. Don't go all in. Start with a 5 or 7% position of your portfolio. As the stock moves up and it breaks resistance, then you could double up and accumulate more shares and let it build into a 10 to 15 per position size in your portfolio and watch it and learn it, right? You're here for the long run. This is a marathon, not a sprint. All right, Bryce, look, I appreciate your analysis. I appreciate your research. I think people can see now the level of work that goes behind putting together all of these slides and of course, researching it and applying some of the technical skills that you've developed in the program. So thank you very much for participating and doing all of this. So with that being said, folks, thank you. I'll end the session here. And with that, take care and I'll see you in the next one.